the World Gold Council put out, I think it was a month or so ago, they put out charts of an estimate they were making, and I'm not sure what they were basing this on, whether it was import-export logs or how they estimated this, but they had a chart showing central bank declared gold purchases versus central bank estimated gold purchases.
Right.
And for some of the big buyers, the estimated gold purchases were on the order of like twice as much as their officially declared purchases.
Surprise.
So now, but put these things together, like how could that be? How could they buy so much and nobody would notice or it wouldn't move the market more? Well, maybe this new news that we're getting about buying on the local markets in local currencies explains it. That's how they can do this without blowing up the whole market. You know, and you might say, well, gee, as a gold bug or a gold stock speculator, I want them to blow up the market. I want prices to go to the moon. But, you know, Mr. Market doesn't care what we want. Important takeaway, Jeremy, is, you know, you look at gold over $3,000 an ounce and, you know, any white bearded gold bug is going to say, you know, okay, that's great. And yes, it should go to the moon, but, you know, it's not dirt cheap anymore. So, you know, it feels like if you're buying gold or gold stocks while gold's, you know, well north of $3,000 an ounce, it doesn't feel like buying low. And the whole idea is buy low, sell high. And I myself would be much more nervous about this. I'm the guy who gets rotten tomatoes thrown at me at the Vancouver conference or something for saying that something that's gone vertical like this is likely to correct. And the reason why I'm not sounding that kind of alarm on gold is the central bank thing that we're talking about. Like this is a game changer. Ever since, you know, it wasn't Trump, it was Biden weaponized the dollar on Russia. That was a paradigm shifting moment where everybody around the world saw the writing on the wall and central bankers started buying with gusto. And I just don't think that changes. I don't think there's any trade deal that Trump can come up with China, or I don't think peace in the Ukraine is going to suddenly make Russia and China say, you know what, we're perfectly happy having our financial lifeblood flowing through New York. It's not going to happen. So I think this is durable. I think I don't know that 3,000 plus is the new 2,000 or what. I mean, that's another magic 8-ball question. But I do know that, or I think I know, that this change is permanent, it's durable, it puts a very high floor under gold. And it just seems like anytime gold dips around to 3,300 or even lower once recently, that central bank buying kicks in. You know, it's not the Fed tweaking interest rates, or it's not, you know, even war news. It seems to happen when there's no news. And to me, that tells me it's the central banks. So I think this is really important for the audience, because if you're nervous about buying in this space, you know, hear me, I'm not saying chase everything at high prices. I'm just saying I think it's highly material that there's a new buyer in this space, a major buyer with very deep pockets. And I think that limits the downside risk. Well, I wouldn't say shifted my view. It was interesting to see the mood was definitely more positive. And, you know, it's mostly gold bugs. How can you not be positive with gold over 3,000 and staying there, you know, stubbornly staying there? But the other thing, this isn't a change in my view, but maybe the big thing that I saw that really impressed me was the number of young people, Jeremy. It wasn't just people bringing their kids. It was young people who are investing in our space. And, you know, when I first started in this, it was a sea of silver hair in the audience. And then it was more distressing because a few years later, it was like no hair in the audience. And now there's hair in the audience of all kinds of different colors, you know, dark hair, blonde hair, people with hair. There's younger people out there. And I think this is terrific. And I know gold bugs like to hate on cryptos and Bitcoin, and the crypto crowd likes to hate on gold bugs, so I can understand it to some degree. But one of my things is that the crypto crowd has done gold bugs this huge favor of educating not one but two entire younger generations on the foolishness of fiat, the value of real monies that can't be printed by governments. And, you know, old boomers weren't getting that message through, and the crypto crowd did. And those people who are not religious Bitcoin maxis, they're looking for anything that they can speculate on. They've been bitten by the speculation bug. They're open-minded, and they're attending conferences like Rick Rule's and Brian London's and Jay Martin's. And I see it. And I just think that's really bullish, you know, because if we're right, but all the buyers die out, you know, that's not so great for our markets. So it's great to see young people jumping. No, there's some important things to think about here. One is, I haven't checked it before we went live here, but the last time I looked, copper in London was actually cheaper than a year ago. So this huge surge in the copper price is the US copper price for obvious reasons that you just went over.
Right.
But copper is a globally fungible commodity. If you think about it on a weight basis, it's much more valuable than oil. We pay $60, even if you paid $100 for a barrel, it's a very large amount, whereas we're talking dollars per pound of copper. So this is not something that a price in one country will necessarily set the pace for the whole world. If you're a copper miner in Peru and you contracted to sell your output to a smelter in China, do you care if the COMEX in the US has an all-time high price? It's not going to affect you at all. So to your question, you're talking about rerouting. It's interesting. There's been a bunch of front running on this. When Trump announced initially that they were looking at a copper tariff of some kind, and the copper price jumped to an all-time high in the US again, I thought it was silly. It was premature. He didn't actually announce a tariff. It was a study group. We will think about doing something. And for the price to grow nuts on that, it just seemed overdone, and especially with the globally fungible metal angle. But now we have this 50% announcement, and it seems like those people weren't so crazy after all. And especially if you needed that copper in the US, if you're any kind of US manufacturer, builder, or intermediary metal market maker, you want that copper there. They bet correctly, right? They chose wisely to get that copper in the US first. But then again, this 50%, is it really going to stick? Is it a negotiating tool? All these tariffs seem to come and go depending on the true agenda for Trump. And at some level, he has to know that we just don't have enough copper in the United States. We import 50% of the copper we consume annually. All the regulatory, red tape cutting, all the new mine green light giving, anything he can do, it's not going to replace all that copper. So I'm not convinced that this 50% is going to stick, and that is a red flag here. If you're thinking, copper is off to the races here, it can only go higher, but there are reasons to be cautious about that thesis. And remember, globally fungible, the price of copper around the world, all that copper that doesn't go to the US, it's going to go somewhere else. And what does that do to those prices in those places? I think you need to be careful here. This is not a rising tide raises all ships kind of bet. And we're still not done. Sorry, I'm getting a bit long-winded, but I got one last thing that I think is really important on this, Jeremy. Trump shock. I mean, even if you agree 100% with Trump's agenda, it is transformative. Rebuilding the United States economy is no small thing, and it impacts the entire global economy. I don't believe that can be done painlessly, seamlessly. So Trump shock still has an impact to be had, and Dr. Copper is a fundamental, economic mineral that we need for everything, like oil. So Trump shock in the near term is actually bearish for copper prices. You've got these tariffs, and you have fiscal dominance. We've got, the great big beautiful bill and all trillions of spending that we've gotten. But don't worry, we'll cut the budget later, right? That's bullish for copper. And I honestly don't know. I don't know which of these two forces will win out. It's possible that even with, serious Trump shocks still to hit the markets and the real economy, that fiscal dominance swamps all of that and prices go higher. It's also possible, especially for something like copper, that as the reality of what's already been done and the new higher levels of tariffs that are even now being agreed on work their way into the real economy, that something like copper can go into reverse near term. I'm inclined to think it will be the latter, but I don't know. So I am accumulating cash because I really like the copper thesis and I want to buy copper. I just don't want to chase it at all-time highs, at least in the US.